Welcome to Tuesdays Live, my very favorite day of the week. And we're going to start just kind of getting a few little things out of the way. Number one, for Sandy Anderson, where you're going to Laos in January, I have put a piece together. I'm not quite sure exactly when it's coming out, but probably sometime, what do you think? Next week, this week? This week or next week, so way before January. But I will give you a little bit of a teaser. Every single fiat currency is in the same boat. So there's your answer on that. Also, people have wanted to see the Zang rounds. So I think Josh has a picture of it, the front and the back, because you can't even really see it from here. But they're beautiful, and they're 1 ounce coins, and there are the Zang rounds, as you can see. So Lacey Davis asked this question, and it happens to be what we're going to talk about today. So I'll ask the question, and then we'll just jump right in. And Lacey says, can you explain what the significance of the Japan deal is? And and can we see the silver round? So now you saw the silver round, and, they make a great Christmas or Hanukkah or any kind of gift, or just an I love you present, which I personally like I love you presents better than any gift for any specific reason, just because it shows that you're thinking of someone. But let me take you down this Japanese rabbit hole, although it really isn't a Japan rabbit hole, it really is a debt rabbit hole. And I want you to picture a giant dam that's holding back the river. For years, governments have been patching those cracks with, what do? Oops, that one didn't work. I wish that would happen to them. But just patching those cracks with new paper debt, new promises, new IOUs. Well, at first, the patches seem to hold and they push all the markets up. But as the water rises, the pressure builds, and each new bond issuance, each new debt instrument issuance is another flimsy patch on a wall that was really, frankly, never designed to carry this much weight. We are at the end of this system, and now the cracks are spreading. Investors, those at the top, well, they see the leaks, they panic, they buy gold. They know that the water, once that water starts rushing through those cracks, there's no stopping it. And that's the global sovereign bond market today. That is a dam built on paper promises, straining under the flood of deficits and inflation and the need to create even more deficits and inflation. So let's just jump right in. And if I could have the slides, please. Because what's actually happening is governments around the world sell bonds, basically, and what those are IOUs, to pay for their spending. But investors are losing confidence. Remember, we talk about that all the time. Confidence in any Ponzi scheme, confidence and new money, those are the two most important keys. Inflation hasn't gone away, deficits are growing, and central banks don't look as strong as they once did. So investors are selling those IOUs, those bonds, which makes the bond prices fall and interest rates rise. Remember this beautiful little sterling silver chopstick. When interest rates go up, the market value of the bonds go down. So in the US, Europe, and Japan, borrowing costs are now at the highest that they've been in decades. And when interest rates rise, governments have to pay more to keep the lights on. And as you can see here, there's the Federal Reserve public debt, but there's the international debt securities. And it's all going in one direction, and that's up. And so it makes things look great on the way up, but you have to be able to pay those debts. And that means that there's less money for schools, for roads, or healthcare. Banks and pension funds who hold tons of these bonds, well, they see their balance sheets shrink. And when bond markets shake, it's the biggest market in the world. Well, derivatives, I would say, is probably the biggest market in the world. And those are opaque. We can't really see it. But when a bond market shakes, currencies and stock markets wobble too, because they've used that debt to prop up their currencies and the stock markets. We've talked about the carry trade, which is borrowing at a lower interest rates and then taking that money and putting it into higher yielding instruments. But frankly, it's like dominoes. When one piece falls, the rest start to tumble as well. So the biggest risk is that governments get trapped. They borrow more to keep that dam floating, but the dam just keeps getting weaker and weaker, not stronger. Now, of course, emerging countries feel it the worst because investors pull money out of their bonds first. But now what we're seeing is that that's trickling over into the advanced economies. You know, debt cannot grow to the sky without a level of repercussions. And that means there's a whole bunch of carry trades that will have to unwind. And that means that stocks and bonds and other things will have to be sold, whether they want to or not. Because once confidence breaks, we could see crisis spread across the world, just like we've seen in past debt shocks. And it's happening all over. So when you ask me what's happening in Japan, well, my goodness, Japan has actually been the poster child since the 90s of how to fight and lose the deflationary battle. Because remember, there's only one way to fight deflation, and that is with inflation. And so they struggled with deflation for decades. Well, they're not struggling with it anymore. Now they've got the inflation on top of it. But again, all those bonds, 15 years, actually they had way more than that since the early 90s. Any of those bonds that are still in the system are way underwater, and we cannot see it. We cannot see it until it's too late. And that's why it's critically important for you to become your own central banker and hold on to sound money. Critically important that you do that, because this is when the bond market broke. And we've talked about this before. This is the interest rate chart, and you can see where there's been a series of lower and lower highs. That is an indication of a negative trend. But you can also see on this chart where that is going, where we hit zero interest rate policy, tried to raise rates, didn't work very well, lowered them again, but now those interest rates are up much higher. Remember, they tested the negative rates. It doesn't work. This is when that bond market that really started ticking. So treasuries lead the global bond sell-off amid corporate supply surge. They'll say, oh, this, they'll say that, they'll say whatever they want, but here is the reality of it. The Treasury, the 10-year U.S. Treasury, is the foundation of the global bond market. So if that is what's leading the sell-off, well, we've got some much bigger problems ahead of us. And here are the interest rates on the 2-year, the 10-year, and the 30-year bond. And you can see how those levels are spiking up. And that's what they mean when they say that. But frankly, here's the bigger lesson. This whole dam is built on promises and lies. Bonds, currencies, deficits. They're all claims backed by trust in governments, right? Full faith and credit. So as long as you trust them, you keep loaning money to them, but trust can wobble. Sound money that cannot be inflated away. Gold is the primary currency metal, silver is the secondary currency metal. That doesn't wobble the same way. It doesn't depend on promises. It's like reinforcing the dam with stone instead of paper. And when the flood comes, stone holds its weight. So what should we all do? Well, we can't stop governments from patching with paper, but we can choose what we hold in our own hands. A solid, sound money strategy with a foundation of gold and silver means that you are outside of the system owning assets that don't vanish when confidence does, because they're used in every single sector of the global economy. This is not rocket science. It just means that preparing families and communities with gold, silver, food, water, energy, community, and shelter, real value, so that when that dam cracks and breaks, we are not swept away. We can hold strong because we are as independent and self-sufficient as we can possibly be. The bond sell-off is a warning, but don't rely only on paper promises. Build your foundation on sound money, and you will have stability no matter how hard the floodwaters, or how high the floodwaters raise, I should say. And they will raise very, very high, because the next step, I'm sorry. The next step is visible hyperinflation. And that's what I keep trying to warn you about. I can't tell you that this is going to take place at 8:35 on Tuesday morning, but you can't tell me that it won't. And so the whole point of being prepared is to have everything in place ahead of time. And while I've been working on that diligently since 2008, because that's when I absolutely knew the system died, we don't have that level of time. So local community can create that surety in food, water, energy, security, barterability, wealth preservation, that community peace and shelter. But globally, we need to have a revolution, because we are transitioning into a new fiat money system, into a new monetary system, I should say. And this is the best opportunity that I've ever seen to get sound money, redeemable gold, back in the system again. If we don't do this, we will be in full surveillance. And everything you have will be intangible, and everything you do will be tracked and traced and dictated. Right now we have a choice, but the bond market cracking, that is, I think the derivatives market is bigger than that, and we can't really see it. And derivatives are all about bets and leverage. The bond market is all about debt, and it looks great on the way up, but it's horrible on the way down. Get yourself protected. It's critically important. And now, I hope that explained it, Lacey. If it didn't, then you let Josh know, and we'll go from there. Because you also asked, so this is Lacey Davis, 4770, in the exit strategy, would it be better to take a loan against our gold for tax purposes? Do you offer that? Thank you for the beautiful Thanksgiving card. It was beautiful. I hope you all got that. And if you haven't, call us and have it sent out. I thought that they did. Ashley, who is our social media manager, and Josh, who put it all together, and Mimi probably as well, did a great job on it. I was quite happy with it. So I'm glad that you liked it. And no, I mean, you cannot fix a too much debt problem with more debt. What gold and silver are their savings-based money, because it takes energy to pull them out of the ground and put them into any form, and their money in any form as well. But in especially gold's case, because it is indestructible, that energy is stored. It's saved. This is why it's a savings-based currency, or money, I should say. And that means that it can be used over and over and over again, an indefinite amount of time. What they have in mind for us is more like, this is just a visible representation of those formulas that you and I didn't write. And probably, I can tell you, for me, I can't speak to you, but for me, I don't understand them. I'm not an engineer. I'm not a specific kind of engineer. So therefore, I would say that it'd probably be easy to take advantage of me. Because how many times can you be lied to when you do not know the truth? Physical gold and silver, that's easy. And we are now watching the market shift from a paper-driven price to a physically driven price. Yay! It's about time. Isn't it really supposed to be about supply and demand? Yes, it is. So, no, I would not be taking a loan against our gold for tax purposes, nor do we actually know what those taxes will be when it's time to exit. But what I can tell you in the exit strategy, or actually in the foundation of the whole piece, even whatever that tax level is, it's a circular design. So it's designed to recoup any of those taxes, fees, losses, whatever it's going to be. It's designed to recoup, because on the other side of this mess, you need principal to work with. So the barterable part of the portfolio is designed actually even to be used up, but the taxes would fall in that category. So no, I would not be taking out a loan against our gold for tax purposes at all. And at this point, we don't offer that at any rate. Maybe we will in the future, maybe we won't. We will evolve as it is appropriate to help support your goals and our strategy. And Iron Mom Solo, and if I'm reading that right, yep, I was an Iron Mom Solo as well. I'm really considering trying to trade some of my post-33 gold bullion for pre-33 gold coins, with the price of pre-33s being at or below spot with some dealers. Am I thinking correctly that? And that's where it ends. And actually, I don't know. It's probably some raw pre-33s that might be trading below spot. But I did go in and ask about the premiums. That was one of the questions that came up. And we really are not seeing a collapse in the premiums. We also are seeing that the premiums haven't exploded or expanded as much as I expect them to as we make this shift from the digital markets dictating price into the physical markets dictating price, because the pre-33s are a true supply and demand market. It's not driven by paper. Other than sentiment, that'll have some impact on it, but it's not really driven in the same way as the spot contract markets are. So you are thinking correctly to convert them, but the real reason is because they are, in my opinion, they are the single biggest bargain in this asset class. And there ain't no fever like gold fever. And desperate governments do desperate things. So for our government or any government on this planet to go ahead and do an overt confiscation of monetary gold, that wouldn't surprise me, because they do it all the time. Now, they may call it taxation, or they may call it royalties, or they may call it whatever name they want to call it. But a rose by any other name is still a rose. And a confiscation by any other name is still a confiscation. So this is why I personally only own the pre-33s. I mean, I've got a couple ounces of bullion, but not very much. Not very much. And the only reason why I have them, I have it in my travel bracelets, etc. So you are, but put your goals before what you position into, because it's always the right tool for the job. And you can call us, we'll walk you through it. And Ira Sanchez family, 1391 says, what will happen to my home, mortgage, or my car loans during reset? Well, part of the strategy is giving you the ability when they do that first overnight reset, this is part of the exit strategy, to convert however much gold that you need to back into the paper dollars or wherever you are in the world, back into that local currency to boom, pay that mortgage off. Because much as we saw what happened in 2008 with restructuring all of the mortgages, what they're going to do is put you in a very bad position so that you have to agree to whatever terms they want, and it will not be to your benefit. So much more important, whether it's a car loan or a mortgage, any of your fixed rate debt, you want to have the proper amount of gold to pay that off. Now today, I'm just going to pull numbers. Today, that might be 10 ounces. By the time we do that overnight reset, you might need 1/4 of an ounce to pay off those fixed rate loans. So that is a huge advantage. And that's the way, well, that's part of the strategy, is to take care of that debt boom so that you are not in a position where you have to accept whatever terms they're going to stuff down your throat that is really not in your best interest. And Wolf 728 asks, hi Lynette, in a confiscation, would foreign bought gold be exempt? Kind of probably depends on what foreign bought gold you're talking about. If it's like a new Canadian maple leaf or what have you, Chinese panda, whatever it is. If it's a new coin and you can hold it in an IRA, then it is classified as monetary gold, and yes, it would be subject to an overt confiscation. If, however, it's the earlier, I don't have one of these in here, but if it's a pre-1948 Swiss franc, French rooster, German mark, et cetera, then they had a similar status to the pre-33s, and you cannot hold them in an IRA. Okay, that's the kind of stuff that I really personally like for property taxes and things like that. So, yeah, that's pretty much the way that it works. Just check the IRS guidelines. If you can hold them in an IRA, I choose not to do them. You make whatever choice you're comfortable with. And DL Blue 65 says, last week you showed a chart with the premiums during a pullback. Does that mean the slabbed coins only have a specific window in which to capitalize on the increased values? Not really. And I'm wondering, let's see, does that mean you showed a chart with the premiums during a pullback? And I think what you're referring to is the comparison chart that I did between the coins, the spot gold chart, and the gold stocks. So there isn't, it depends, because 2008, what did they do? That's when they came up with the QE and just started flooding the system with lots of money and put a halt to the implosion in the real estate market and in the stock markets and in the bond markets. We're at a different phase now because they've had all of this time to get or to prep the new digital system. And you can see, even though some are saying we're in a digital winter with the collapse in pricing of the cryptocurrencies, boy, the banks aren't treating it as if this is a problem. They're moving full steam ahead. The central banks, the Federal Reserve, is establishing rules for stable coins. It doesn't matter what the markets are telling you. Well, actually, it does matter what the markets are telling you. But what I'm really seeing is that those that are in power, they don't care. They're pushing forward, which is why it's so critically important for us to come together globally and demand sound money, redeemable gold in the system again. We got to do it. Time is running out. And one person can't do it. What can I do? I'm one person. I can't do anything. But together, we can make a difference. And we better do it because they're moving forward. Are we moving forward too? Yes. Are they moving forward faster than we are? Probably. But if we can grow that global community and make that demand, we got a really strong shot. And here's the worst thing that happens. The worst thing that happens is that you become your own central banker, and at least you and your family are protected. I think I want everybody protected, but what my family will know is that I fought for them, and I think that's important too. I don't know if we can do this or not. I can't sit here and say that sometimes it doesn't sound crazy to me, but what I can tell you is if I don't even try, nothing happens. If I don't try, then that's my vote that they can do whatever they want with me and my heirs. That is not how I feel about it. This is my vote. This is my vote. What's your vote? We come together and all vote in the same direction, we got a shot. So no, there isn't a window. It just depends on where we are in the trend cycle, and that's what happened in 2008. But there really isn't any doubt in my mind, and of course I could be wrong because this is just my opinion. But I do believe that we are already in the beginning stages of that hyperinflationary event. It's just that level of confidence that is rapidly declining. There's only one more layer of confidence left, and that's public confidence. So they're rushing to get everything in place before that collapses, and I'm rushing also to get that in place so that you don't have to have confidence in this. You hold it, you own it outright. And it's real money, and it's above all central banks and governments. Isn't that what you want? Do you really think that the cryptocurrencies, for those that are into it, I mean, really, how much above the markets and outside of the system do you really think they are? It makes no sense to me when people still want to believe that they're outside the system. They are the system. My goodness, they are the system. So, no, we'll have a longer window because we're at a different part in the trend cycle, and this is the end, and there will be a rush like there has been into gold, and we're already seeing that. We're seeing this shift happen right now. So have a little bit of patience, but I don't think you need a whole lot more patience. And Piotr Rojklo, 1150, I'm sorry if I butcher it. I want to ask if there will be any silver gold price collapse or correction. I assume that to protect currency, government sold Bitcoin recently. Government sold Bitcoin recently. Next will sell silver gold. What do you think? I think the government is all in on the cryptocurrencies, and they want us to get full adoption so that they then have full control. I have not heard that the U.S. government had sold any of its Bitcoin, rather that it's been piling up in private equity and taking more ownership of corporations that are in financial straits for whatever reason. They're doing that. But will they sell silver and gold? No, I don't think they're going to sell silver and gold. They're too busy accumulating it because they are very well aware of, they are very well aware, it doesn't matter, of the fact that they are destroying what little bit of purchasing power value is left in the currency. It's not like they don't have lots of examples historically for this. You know, they do. And they know that only gold and silver will live on. And that's why it's the foundation of what's called dynastic wealth. This is wealth that lasts in families at least 300 years. At least 300 years. Now, it may shift ownership, right? And dynastic wealth has three legs: real estate, truly rare collectibles, and gold. You can do all three with gold, and it's critically important that you have that sound money as a foundation. And that's what, I mean, if you think about the King of England, what does he have? He's got rare collectibles, real estate, and gold. That's what's been proven over thousands of years. If this is indeed a crypto test, well, let's see where it ends up. But unfortunately, I fear that if we don't do something, if we don't come together and say, no, we're not okay with that they will have full control and we'll end up back in like a feudal system again, which is not what I want. So no, could there be a correction? Well, what we've been looking at, and I don't have these charts today, but I show them to you pretty much every week with that 200-day moving average. So I'll go over it and then you can go into stockcharts.com for free and you can see what I'm talking about. But every day for the last 200 days, they total up where gold closes, they total up where silver closes, and they divide it by 200, and that gives them a 200-day moving average. And it kind of acts like a rudder on a boat. And if the price is a water skier, there's only so far one way or the other, so above or below, that it can go before coming back to that central line. So when prices, which is what's been happening with both spot gold and spot silver, have gone up dramatically, then it has been technically overbought, not overvalued. That is a very big difference. But overbought, simply meaning that it went too far too fast. So what I've been witnessing with both spot charts in gold and silver is that it's been going inside of a range, giving that 200-day moving average an opportunity to catch up to it. Then you'll get another spike. And we've gotten another spike with silver as gold has been consolidating. But all of that is very, very positive and very, very powerful. Could we have a pullback? Of course we can. These are paper contracts, and they can sell as much gold and silver that does not nor ever will exist as they want to. There's no limitations on that. And in fact, back in this probably would have been 2009, according to the Bank for International Settlements, which is the central banker's central bank, for every 1 ounce of physical gold, there had been created 62,000 digital ounces of gold. That's gold that does not nor ever will exist. And quite honestly, that was before the central banks really got into it. So what are those levels now? I personally have no idea. That's really opaque, to be perfectly frank with you, because even when they give you a number, that's a nominal number. And as soon as you hear the word nominal or notional, that's just what the market decided to value those contracts at. And every single entity, whether it's the Federal Reserve, the Bank for International Settlements, the FDIC, the IMF, take your pick, and that alphabet soup of those that are managing or guiding or paying attention to these markets, every single one of them will tell you that they have no idea of the true value at risk. So you tell me, we'll go back to that premium question for a second, but you can tell me why in the world would any of that be okay with you? That they just create these papers to control everything, and frankly, traders to price everything. Yeah, that means your energy, your food, your water, your real estate, your everything. Every single thing that you use on a day-to-day basis is not based on supply and demand like we think it should be. It's based on traders' profitability. So, no. They're not going to sell their silver or governments really hold the gold. Central bankers are holding the gold. No, they're not going to do that because that's what they need to maintain their position and their independence. Same thing for you and me. You're holding gold and you're holding silver, and you have surety in food, water, energy, security, and shelter. You are as independent and self-sufficient as you can be. And when they say jump, you do not have to say how high. You can say no. Wolf 720, Wolf 728 asks, Lynette, could you please explain why any country, etc., would buy our debt? Mostly for an agreement to keep these things going. But as I've shown you before, and it's critically important that you get this, and I don't have those charts easily, but I will show them again to you next week because it's so important for you to notice this, the run on the dollar. When the U.S. was the reserve currency, countries and corporations had to hold dollar or dollar-denominated assets like our debt in order to buy lumber or medicine or steel or anything that they were wanting that was going outside of their borders, so they couldn't use their local currency. Well, that started to shift in about 2000, but it really sped up, and it peaked with foreign ownership of our debt in what year was that? 2008. And by 2013, both China and Japan, so our two largest buyers of our debt to keep this whole game going, well, they started not buying as much and also allowing their balance sheets to run off. Meaning when a bond matured, they did not replace that bond. That is equivalent to the run on the dollar that the U.S. experienced in the 1960s. So make no mistake, even though they did it because we were the world reserve currency and it benefited them to keep the game going. But everything is shifting now. The system died in 2008, and we started losing our status as the world reserve currency in 2000. But that's why they would do it, to keep the game going for a minute longer, but it ain't going anymore. And that's a problem. And that's why one of the big reasons why I believe President Trump signed the Genius Act and legalized the stable coins to create the next artificial market for dollars and for debt for those treasuries. But I think it's too little and it's too late and it's not effective anymore anyway. So that's why they would do it. And SQ 7944, excuse me. You are spot on. Now is the time to prepare. Clive Thompson recently discussed the changes that are in the works for UK digital, banking, wallets, and surveillance. Yes, and you'd also notice that they are raising a whole bunch of taxes on a whole bunch of things because this is how governments get their money. They create debt and they raise taxes and they lower services. So I think it's great that you bring that up because I think I am spot on. At least I'm moving forward in my life as if I am spot on. I mean, I bury myself so much in this stuff that when I see these things, I have to get prepared. This isn't something that you can do in an instant. It's something that takes a lot of time, thought, and effort. But that's also why local community has become like tippy-top important because we don't have the same luxury of time. I've been buying gold and silver in earnest since 2002. And I became an urban farmer after the system died in 2008. Do we have that much time? No, we don't. They can't kick the can down the road forever. They can kick it down the road as long as that public confidence holds up. But there's only one way to fight deflation. That's prices going down, and that's with inflation, and that's prices going up. And so, inflation has proved sticky. Of course it's sticky. It's designed to be sticky. It's designed to compound. It's not designed. It's just the rate and speed that's designed to be moderated, not the price levels. That's just designed to keep compounding. And every once in a while, you get a little pullback here or there, and people go, oh, good, it's going back to normal. It's never going back to normal. That's why you have to be your own central bank. But yes, thank you, because it is the time to prepare now while you can, while there are options that are open to you. And Lincoln 05H asked, I heard the Fed just started QE officially by injecting $13.5 trillion in overnight repo market. Of course, they've got to try and keep this game going. Won't this cause inflation just to hide subprime bankruptcy problems? And it's so much bigger than just the subprime bankruptcy problems. Yes. They're trying to fix a too much debt problem with even more debt. And the problem is that every time they do it, it's not as effective as it was before. So it's like pushing on a string. So there will be a point, if it isn't, it could be right now. That's what the global bond market sell-off is telling us, that this could be right now, that no longer works. But they've got to keep, and ask yourself, all of that money that they've created and pushed into the system, it didn't evaporate. So how come they need even greater liquidity injections? So yes, the QE continues because they are all out. Well, I want to say they're all out of tools, but I don't know. Maybe they'll come up with something else that I can't see. I don't know. But totally, the time to be prepared is now. And if you're prepared and they shock you with another tool that you didn't think of. So my question to you is all of this behavior okay with you? Because if it is, don't do anything. Just let them abuse you. But if it's not, then not only should you become your own central banker, but you should join me in the global sound money movement. You should demand your power back. Let's go back to a constitutional government. What a concept. It didn't just stop. They really killed it in 1913, and they've just been abusing it ever since. Why is that okay with you? It is not okay with me. We need to do something about it, and we can. We can have a peaceful revolution into sound money, gold and silver that's above those governments and central bankers. And Connor McCarthy, 5960, Connor McCarthy, 5960 asks, Lynette, I saw a chart with two lines showing the S&P's return adjusted for inflation versus not, aka the official numbers, from 1929 to now. Can you explain why it appears that we haven't even recovered from 1929? Well, could it be that things have really, there was a while where taking on that debt really did seem to boost the economy, and the individuals like you and me actually participated in the increase in productivity. But quite honestly, I don't know what chart you're looking at. If you could send the link or put the link in there, and I'll take a look at it and we can talk about it next week, actually. And I can see if I can find one too. That won't be a very hard one. So let me do that, and let's talk about this next week. Okay, I'm just making a note for myself. Chart on adjusted for inflation and not. All right, I'll have that for you guys next week. So we'll talk about it again then. And Broke Stacker, we all love you, Lynette. Thank you very much. I really do appreciate it a lot. National treasure, and you deserve a Peace Prize. Thank you so much. But you being here is really all the prize that I need. And I can't even begin to tell you how much I appreciate it, because the most valuable asset that you have is your time. And the fact that you make the choice from all over the world, really, to be here, that's all I really need. And boy, oh boy, if we actually could get sound money back in the system again, oh wow. That would be everything to me and all I really need. That's all I really need. Because then I'll know that everybody's protected. And by the time I leave this planet, and I'm only 71, so I still have 29 more years to go, but I would like to think that I will have made a positive difference that had an impact on a lot of people. Sound money back in the redeemable gold. So sound money back in the system again, giving the public back their power. That would be all I would, oh my gosh, ever need. Boy, I would die happy if we can make that happen, honestly. But don't worry, because I'm not going anywhere. And Miramore asks, if relevant, could you please explain what it means when you said that corporate debt was turned into fiat? I just can't take that in. How easy would it be? Okay, you know what? Because I want to show you, all right? And I will do for next week, corporate debt turned into fiat. I'm going to show you when they did it before, and I'm going to show you as they're doing it now. And yes, I'm going to show you. I will show you, because I just find everybody learns a little different. So if I can do it visually and auditory, and then ask me questions, right? If I explain something and it doesn't make sense, don't worry about insulting me. My goal is to translate financial noise into understandable language so that you can make educated choices that puts your best interest first. That is truly my goal. So if you don't understand what I'm saying, really just let me know and I'll try and explain it another way. But this one I'll do visually as well as verbally. That's a good question. I'm glad you asked. And John Bethia 4505 asks, I am 79, and when I used silver dollars when young, I never thought that a silver dollar would be worth this much in fiat dollars these days. Well, that's how they get you, don't they? And that's what they knew when they set up this system, is that not one man in a million understands inflation. The problem is that we also had the Federal Reserve and the ECB and the Bank of England. This was a couple years ago, but they came out and said, we don't understand inflation either. Well, they're the ones that's supposed to regulate it, so that's a little scary to me. But yeah, I'm right there with you. I mean, you know, here are the dime cards, right? This dime was minted before 1965. We bought these back in, that was August, so before the big run, and our cost on them was $2.78 then. Now they're probably more like $4. Well, probably more like $5 or so, because I think spot silver is up substantially, maybe double from where it was when we bought these. This dime buys you nothing. They'll probably be getting rid of it like they recently got rid of the penny because it cost them more than a dime to make the dime. And really, if they can take any form of physical money away from us, well, that puts them in a much better position to control everything. Because the only thing they can do with this stuff is inflation. But once it's all digital, they can make that happen at a level that there's no way that you're going to see it. But it'll still be happening. So, yep. And Emir Bilal Mohammed asks, I am planning to buy a house at mid of 2026, but I think to save that amount in physical silver and wait until mid of 2026. I guess I would buy 2 or 3 houses rather than one house today. What's your thoughts? Okay, so I don't know what your specific circumstances are and if you have a house already, because everybody's going to need a place to make their last stand. So that's why shelter is part of the mantra. If you do, then I mean, we're already seeing a shift in the real estate market. It's just people want what they want, but they're now starting to realize they're not going to get it. So the prices are going to come down. And if it's certainly just for an investment or speculation, I would not touch real estate with a 10-foot pole right now. It will get substantially cheaper. If, however, you are renting, there will be rent controls that are put in place. However, you do need to have a place to make your last stand. And part of the strategy, and part of the exit strategy, frankly, is to repay any fixed rate debt with dollars that have zero value. That's the government's plan and their strategy, and we can do the same thing. So it's not horrendous to buy a house now, as long as you make sure that you have enough gold put back so that when they do that overnight reset, boom, you pay it off like that. So what I suggest is you give us a call, talk to one of our strategy specialists, or if you have a strategy specialist, have that conversation, because that's clearly a goal of yours. And you can do it with silver. You know, I mean, it just kind of depends on what your personal circumstances are. That's why the sound money strategy is tweaked. So you're going to be executing the same strategy as me, but it's going to be a little different because I might have different goals. I would maybe be in a little different circumstance than you. So, and the strategy is based upon your goals, your circumstances, and what you have to work with. So call us and let us, talk it through. See what makes the most sense for you to do. The biggest challenge that I have with silver is it going to keep moving up in terms of dollars? It just takes an awful lot of it. To buy real estate with, or something very large. But that doesn't mean you can't do it, and that doesn't mean that you shouldn't do it. Just talk it through and then think about what puts your best interest first, and then that's the way you should move forward, even if you disagree with us, right? I mean, after all, you're the one that's going to reap the rewards or suffer the consequences of any choices that you make. So I just like it when they're educated. That's all. Just like it when they're educated. And I will support your right. Even if you differ with what I believe, I'm still going to support your right to have that opinion, because this is a community and everything matters. All opinions matter. Data, for me, I'm data gal, so data matters the most. But let's make all educated choices that are based upon what you're trying to accomplish. And Manoj Roy, 657, I want to hold gold and silver for long term. What should be my strategy, and how long in years should I hold it so that I can make good profits booking? Oh, that's so big. Number one, you always have to have a foundation in sound money. So depending upon your circumstances and what you're trying to accomplish, that's the way you lay out the portfolio. For me personally, leaving a legacy is extremely important. So that is the kind of gold that I intend to pass down, and hopefully I'll be up there watching so that helping them not make stupid choices, my heirs, and my future heirs. But hopefully that can lead to a really dynastic wealth foundation that none of my heirs can outlive. And that means that they will have all choices. Having said that, there are multiple parts of the strategy, about 6 different parts. So depending upon what it is that you're trying to accomplish, that's where that piece is going to vary. Because this is a currency life cycle issue, and because, admittedly, everything other than gold and silver are severely overvalued. When you're talking about how long in years, who knows? timing is the biggest challenge of any technician. I can tell you what is most likely to happen next, but it's hard for me to say it'll be Tuesday morning at 8:35. But what you want to always do is you want the lion's share, or you do whatever you want. I want the lion's share of my wealth in an undervalued asset like gold and silver that is in a long-term positive trend. And you know it's a positive trend when you look on the charts and you see higher and higher lows. Because if you keep getting higher lows, you will, I guarantee you, I can't give you many of those, but I could give you this one, you will get higher highs. And I want the least amount of my wealth in an overvalued asset or instrument that is in a negative trend. So you can look at the crypto markets going up, or the stock markets going up, or the real estate markets going up, but you're not really looking at what the real trend is. The real trend is in the purchasing power, that's empty, but the purchasing power of this stuff. And that's going to zero, regardless of the number of them. What? You guys know I have a $10 trillion Zimbabwe note, and I can't buy anything with it. So when you're looking at that, what I suggest is that the strategy will unfold in layers. It's built in layers, 6 layers to be specific, and then it unfolds in layers, and you will be using each one of those layers dependent upon where we are in the trend cycle. The first layer being your barterable, the next layer protecting whatever fiat money and tangible wealth you've managed to accumulate, and also making sure that you have debt payments that you can, boom, pay off that fixed rate debt. It would also include being in a position to generate income that you cannot outlive. What a concept, right? And for your heirs that they cannot outlive. But all of these things are going to happen at different times as we move through this trend cycle and transition from one system into the next system, right? You need to have sound money on the other side of this into that new system. So while I can't give you specific dates, what I can tell you is that we've built this strategy on layers that are based on repeatable patterns that happen every single time we go through this. And therefore, you are in the best position to move from your gold and silver into those other areas when they are undervalued. Right now, stocks, real estate, bonds, dollars, euros, yen, they are all overvalued. Gold and silver are significantly undervalued to their fundamental value, even though technically they may be ahead of the game because they move too fast from that 200-day moving average. But the reality is this will flip-flop, and you'll have all of those income-producing assets that are now overvalued. Boom, it'll be turned upside down. And if you have gold, you're going to be able to convert into those other assets that you can't outlive. So that's the good profit, is by always having the lion's share of your wealth in an undervalued asset that's in a long-term positive trend, and always making sure that you're shifting into that. That may not be apparent, but that's why it's important to look a little bit beneath, because what most people see, they just see the stock market going up or the crypto market going up or blah, 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 blah. Oh, fear of missing out. I want to participate. It's not the real trend. It's hiding the real trend. And that's the value of this stuff going to big fat goose egg. Big fat goose egg. And Live Sanctified for Him asks, I cannot imagine hyperinflation. Just look at how much more things cost now. Yikes, exactly. So imagine you go to the grocery store and you pick up a can of beans and it's $5. By the time you get to the cash register, it's $50. That's hyperinflation. Yeah, yeah. We aren't even, we've begun, but we aren't even near a peak on that. It's not visible to the general public. Yes, they are in pain. No doubt about it. They are in great pain. However, when that hyperinflation begins, that's why you got to have that local community. Please, please, please. That's why I do the videos on the farming. Food is the single biggest issue for people as we go through these transitions. You want to make sure that you and your family can eat and anybody else can eat. That's why I planted out the whole exterior of my property. And I'm on a corner, so, it's a pretty big corner. But if somebody is passing, and my neighbors know this, they'll come and they'll get herbs or they'll pick a zucchini or what have you. And I'll tell you what, I don't think we've put any of this out, and I don't know whether or not we should, but as part of my participation in the community, we decorate this property to the nines for, I call it Christmaka, so it's a combination. And I love this time of year because what happens is when the sun goes down, all of a sudden I hear all of these squeals of joy as the families come through my gardens and see Santa and see the reindeer and see all of this. It's really very fun. But that's part of my community service to brighten the lives of my neighbors. So, yeah. And Daniel Johnson, TM711, asks, hey, Lynette, I have 245 ounces of silver. Do you think that's enough to survive this collapse? Well, it's better than nothing, but I think that you need to give us a call so we can see what you're trying to accomplish and what your current cost of living is. For me, silver is my primary barterable tool. Once I've used up the cash and that other stuff, then I'm going to silver to put a tank of gas in my car, buy a basket of strawberries, whatever that is. And so the amount of silver and the kind of silver and gold, barterable gold, which is the raw stuff, right? Property taxes, ongoing health issues, those kinds of things. So we have it all laid out. And when you have that conversation with one of our strategy specialists, then they can determine, well, how much barterable silver do you need? How much barterable gold do you need to sustain your current standard of living for a specific block of time? I do it for 10 years because this is a global issue. It's not going to work out so easily or so quickly, but you can do it you tell them, well, the first calculation will be for 1 year. How many years do you want to have your barterable portfolio? But I also want you to keep in mind that anything physical or any talent that you possess is also barterable. And that's why coming together in local community can really help you, because you'll be able to specialize. What do you bring to the party, right? I can't do everything myself. It's always interesting to me that people will come on the property and they'll go, wow, when do you have the time to do all this gardening? Well, I don't, but I've been fortunate enough over the years, it's taken a long time, to surround myself with a community that has all the different skill sets. I always like to hire into my weaknesses because that just makes the most sense to me. I don't need to hire my strengths. I have those. I need my weaknesses. Having the time to do everything is definitely one of the weaknesses. And I didn't grow up as a gardener or a farmer. I did learn it, and I can lay irrigation if I need to, and I do know a lot about it because I've learned over all these years. But it's that community, bringing the community together, and what value can you bring into this community? Probably more than you realize. Probably a lot more than you realize. Because again, any talent that you have is barterable. You can also learn a new skill. You can go to a farmer's market, meet the people that grow your food, give them a day or 2 or 3 or whatever of your labor. You're going to learn some skills. You're going to start to create that community. That's critically important. I cannot stress that enough. So, Daniel, give us a call and let's take a look at it based on your circumstances and your goals. And Panola 9840 asks, thank you for the lovely Christmas card, Lynette. You are very welcome. Love your research. What are your thoughts on Glint or Kinesis credit cards for metals? I see them in the very, and you know what I didn't do? Oh, how did I miss this? I needed to do a comparison. Comparison between, sorry about that, Glint and Kinesis. Can't believe I forgot that, but thank you for reminding me. Okay, so I see where it fits for a small part, that instant liquidity part of the strategy. So the same place where you've got your cash, you could even do a little bit of gold backs, and that's where the Glint or Kinesis would fit. And the only reason why I'm okay with those is because you can you can redeem the gold out of them. If you can't redeem the gold, you don't touch it with a 10-foot pole because there's no way for you to know if it's actually there. So I will absolutely, I'm going to star it and make sure, actually, these are all like really important. I will probably... Nah, it's probably not going to happen tonight, but it'll happen by next weekend, although we've got a very busy weekend coming up. Oof. Okay. Well, I will let you know, but Glint and Kinesis, honestly, I can see the credit cards so that you can buy things online or pay bills online, so they do make some sense. It's not where I'd put the lion's share, but it's where I would put a little bit. And again, if you give us a call, then we can help figure out how much of that percentage should be based upon your patterns and your habits and what you're trying to accomplish. And Alexandra Jones 4991 said, I heard Judy Shelton discuss capital gains tax on gold and silver. She appears to favor that. What are your thoughts, Lynette? Well, I don't think that you should tax money. So I disagree with Judy, and I like Judy Shelton on a lot of levels. I do like her. The 50-year bond gold back is a little, is that just a way to keep things going? Capital gains tax on gold and silver? No, gold and silver are sound money. There should not be a tax on sound money. I agree with Ron Paul in that regard. And Denim Labels 7315 asks, hello, Lynette. How do you think the art market will be affected under a debasement? Well, that's where you go to quality again, but that's also where there could be some very, very nice opportunities. You know, I am a tangible gal. That really was the start of my training. I mean, with my Uncle Al, he taught me this. I do like art. It's not so easy to, convert. And it would be more to accumulate for the legacy part of the portfolio. That's how I use it. It is liquid, but you want to, my Uncle Al used to tell me, and it was true, good is always good. And there are always people with money that want the best quality. And that's even true in gold and silver. And so you're looking at this, but you can go on PCGS 3000, not 3000, but you can go on PCGS and look at the ultra rarities, and you will see what the 1%ers do for themselves, because there are coins on there that go for the many, many, many millions of dollars. So I do like the art market, but it's got to be quality, 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 because it is the quality that withstands the test of time, not because Franklin Mint says that this is a collectible, right? It really needs to be very good quality. And Cryptonomics says, I got about 1,000 ounces of silver, stack value looking super nice right now. Yeah, because you're still thinking about it in terms of dollars, right? If I could do anything to help people see that function is more important than this crap, because this crap is being controlled. And if we go into a digital system, it's going to be even more controlled. So what is it that I'm trying to accomplish with my gold and my silver? One of the things, a key thing that I'm trying to accomplish with them is to remain free and to maintain not my financial stability as much as my family's financial stability, and them having optionality in the future, for them having choices in the future, which is exactly the same reason why the central banks are buying gold. It's not because they're going to flip them for this garbage that only has value in one place because it has a stated value, but the purchasing power value keeps going away. And that's by design. And that is a tax on this stuff. And I don't think that you should tax money. This is what we work for. And we try to save for future use. And money's supposed to have 4 key functions. It's supposed to be a unit of account for measure, a tool of barter for trade, a short-term store of value to make sure you're fairly paid for your labor today, and a long-term store of value so that no matter when you use that money, you are always fairly paid for the labor that generated it. This stuff removes one of those pieces because inflation is baked into it, and that's disgusting. Why is that okay with you? That's really the question. Why is inflation okay with you? It is not okay with me. You should not tax money. But they can do it almost invisibly if they can moderate the rate and speed of inflation. That's the central bank's job, that and to stay viable. Well, I want all of that done away with. They can't do it with this, gold and silver. Sound money. Take our power back. I don't like what you're doing, government. I'm pulling my gold out and forcing fiscal responsibility, creating restrictions around what you can do and forcing fiscal responsibility. What a concept. Don't you have to be fiscally responsible? Yeah, if you don't, you're in deep doo-doo. Well, that's what the bond market is telling us. The government bond market, is that bond market doing bad because there's a whole bunch of new debt issuance by corporations? It's an excuse. It's doing bad because the world no longer trusts the ability of governments to repay all of the debts that they've accumulated. Or they repay it with dollars or euros or whatever that have zero value. And Francis Euler says, Europe is going cashless. Cash is being eliminated from financial transactions through the expansion of bank cards and digitized systems. QR code, mobile payment services. Sure. Why? Why would they want to get rid of cash? And it's really simple. Because this stuff is a debt instrument. Federal Reserve note. A note is a debt instrument, but it protects your principal. It doesn't protect your purchasing power, but it absolutely protects your principal. Well, I've shown you the purchasing power chart a gazillion times. So when they get all your purchasing power, what's left? They have to attack your principal. So they've got to get rid of cash. And there was a huge push in 2020 to eliminate, that dirty, stinky cash. Really? Yes, governments want to go cashless. They want you to have absolutely zero protection from their abuse. Now is the time for you to say, is that okay with me? If it's okay with you, do nothing. And that's a choice, and that's your vote. If it's not okay with you, let's take our power back. Let's force fiscal responsibility. Let's say, no, you can't have my principal. You can't have all of the time that I've put in. I'm 71 years old. I've put an awful lot of time into this system. You can't have that for free. You can't have that for eliminating my ability to make choices. No, this is my vote. Gold and silver and independence. That's my vote. Join me. Let's make this happen on a global basis. We can do this. We can totally do this. Yeah, they want to get rid of cash, just like they needed to get the gold out of the system, the redeemable gold. We need to put it back in. Chris Willis, 7359, asks, what is your opinion on setting up shorts on the stock market once debt-free and positioned in gold? Other recommendations on how to profit? Well, a short is selling something that you do not own, and there are no limits to the risks that you would take if you sell a position short, because at some point you must go in and purchase that position back. Now, what he's talking about is selling it up here and buying it up back down here, and the difference between the two is the profit, and that could be a good trade, but it's also a risky trade. Good that you're debt-free, that's fabulous. And also good that you've got lots of gold and silver and things like that. That too is fabulous. But you have to understand, I'm not a trader. Yes, I had all those licenses when I was a stockbroker at Shearson, but it takes a certain mentality to do it, and I don't possess it. You know, it makes me too nervous. I'm watching it constantly. It's way too much stress for me. I prefer to execute a long-term strategy where I can just get in place and not worry about what I'm going to do on a minute-by-minute basis, which you would have to if you're shorting the market. Now, you can short it against the box, so I'm kind of thinking out loud here. But, I mean, if you really wanted to do that, you could short it against the box, meaning that you own the shares that you would have to repay. That is a much more conservative way to do it. But just a short, that's an awful lot of risk. And I wouldn't want to jeopardize the fact that you're not in debt and that you have a bunch of gold and silver that you might have to liquidate to cover that short. So shorting against the box could be a way to do it if you were really set on doing it. I say, if you've got, just buy more gold and convert into more assets. But that's because I am a long-term strategist and not a short-term trader. So you've got to do what you're comfortable. I don't know that I'd do a naked short, though. I think that's awful risky, especially since there's only one way to fight deflation, and that's with inflation. And keep in mind, in a melt-up, the stock market, right? What'll they do? They'll print a whole bunch more paper and they'll push the markets back up. And people will run to the markets thinking that that will protect them from the devaluation, which it won't. So you want a position for profit? Buy an undervalued asset that's in a long-term positive trend. Ta-dam! But I support your right to do anything that you're comfortable with. And Yulia4310 asks, hello, Lynette, could you please explain in more details entry strategies and exit strategies for gold and silver? Okay, so the entry strategy is based on your goals. And a lot of people don't really even know what those should be. So that's why having a conversation with a strategy specialist so that they can help you define what those goals are. But typically the first thing that you want to do is make sure that you can sustain your current standard of living. And you do that with a certain level of cash, which, yes, they're trying to get rid of, but a certain level of cash, maybe a little bit of gold backs, maybe a little bit of glint or kinesis, and then you go to your physical metals portfolio. So that's your first line of defense, is that barterable piece. And then you go to fractional, which means less than an ounce, right, of both gold and silver. So you have a variety of sizes and you build out. That's the first level of entry. What do we need to do to sustain as much as possible your current standard of living? That's your entry. Now you also want to look at any long-term fixed rate debt that you have, whatever you might have, fiat money wealth you've managed to accumulate, whether it's in the stock market, the bond market, the insurance market, wherever it is, and maybe it's in a 401k or a 403b that you can't touch. We want to make sure that any fiat money wealth that you've managed to accumulate is protected, and any fixed rate debt that you have, that you can pay that off, and then be in a position to take advantage when that flip-flop occurs, right? From undervaluation to either fair or overvaluation. You want to grab that and convert it into undervalued income producing assets. That's the exit strategy. You want to be able to pay off those fixed rate loans, mortgages, student loans, car loans, whatever you have that's fixed rate. That's part of the exit strategy. So basically, the silver is on the barterable end of it. And then on the other side of this mess, when we have a new currency that is grounded in gold, because one way or the other, whether it's redeemable or not, in order to regain public confidence, they will put a component of gold in it. I can't guarantee that, but it's happened over 4,800 times without exception. So my guess is that's the way they're going to do it again, because that's what builds people's confidence. And so on the other side of this, you want to have whatever of your barterable, your original barterable gold and silver positions, that's what you might convert into that new currency. I mean, I used to think that I'd convert a lot more than that, but if we're in a digital system particularly, then no, I'll more convert it as I need it, because I'm quite clear that the value of it will be constantly eroded and controlled. And I don't really like to be controlled. Remember, I'm the youngest of 7. And I don't like to be controlled, nor do I like being told what to do. Just the way it works. So I hope that answers that question. But if you call a strategy specialist, they can go into it in more detail, and it can be geared toward what you're trying to accomplish instead of me just going pretty general. And Amir Bilal Mohammed asks, do you think India could fix gold and silver ratio to 10 or some point similar to that level? It seems physical silver will skyrocket because deficit and huge demand and low supply and awareness. I think that gold and silver is above all governments, and I think that the markets will determine ultimately what that gold-silver ratio is. I do think 10 to 1, I can't say. I don't know. But I can tell you that historically what's happened is that ratio grows more and more and more and more narrow until you're fully in hyperinflation. And then once you're fully in hyperinflation, then it grows wider again. But what silver really does, and it does it better than anything else I've ever seen it do, it maintains your ability to buy the same foodstuffs and things. Gold has a tendency, simply put, gold expands that ability, right? Now, in some cases, we are seeing silver is outperforming gold at the moment because it's continuing to rise. And silver gets used up in industry, so it's actually a diminishing asset. And that alone would mean that silver should outperform gold. However, having said this, this is a currency life cycle issue, and I believe you need both, period. I own both. I own gold and silver, but I do it based on what I'm trying to accomplish. So no matter what happens with that ratio, I'm good because I'm not going to be liquidating my gold or silver just for dollars. If I liquidate them for dollars, it'll be to pay off a mortgage, to buy a new property or an income producing asset or some other reason. It won't be to convert into dollars because profit wise, how in the world can you create profit when it goes to zero? What's my profit in this? I think I spent maybe $4 or $5 on this. I mean, I don't spend a lot of money on this stuff because I just, use it for examples. But 10 trillion Zimbabwe dollars. What good does this do me? Absolutely nothing other than as an example. I can't even buy 3 eggs with it. So, okay. SQ7944, I took my cold wallet out of storage to check the device. To make a long story short, I barely used it, could not access the account via app, only given $20 discount to replace. Imagine if in an emergency. And what just happened at the CME? You've got to understand that there is a completely new system that is built on top of an old failing system. And they need a big crisis to justify the shift. Thank you for bringing that up. Imagine if in an emergency. You need to make sure you have surety in food, water, energy, security, barterability, wealth preservation, get that community around you, and shelter. It's what we have to do to be as independent as possible. Thank you so much for that. ZooTube 2024, with great respect to Lynette, bought crypto, sold it at a high profit, bought precious metals far more than I could have ever bought on a limited investment budget. Surveillance banking is already here. And you know what, ZooTube? It's absolutely fine that you did that. Everybody's got to do what feels right to them, and this worked out great. And yes, surveillance banking is already here, and it's been here. I mean, does anybody remember the name Snowden, right? You saw the infrastructure of surveillance banking already in place. It hasn't gotten better. It's gotten worse. In other words, more surveillance. And the banks are rushing to put all of this in place. And the Federal Reserve is rushing to legalize and justify it. The government's already justified it. Yep, you're right. It's already in place. Doesn't that make having gold and silver that much more important? Good job. I'm glad that you did that, and I'm glad that you shared that. And Pepito6326, hi Lynette, should I convert all my fiat savings into gold? No, because the fiat is still what is most recognized. That will change over time and as inflation kicks in. But no, you need a certain level of cash. And as long as they've not put the chips in the bills, because they would like to do away with cash everywhere, this would be classified as cash in the wild. It is not likely that they are going to outright outlaw cash, because then you're going to know something is different. And they really want you to think that nothing has changed. And I've shown you a whole bunch of times how they make that shift really easily. But make no mistake, surveillance money, a surveillance economy, it's already here. What are you doing about it? Me, I'm going as private as I can as far as my money is concerned, because I don't care if this goes away. I have this that will recoup any of those losses. So no, you shouldn't put everything that you have into gold and silver. It should be based upon your current standard of living and then what you need to do from there. But yeah, no, cash is part of the first line of defense. And TSM Gent says, how do we buy gold or silver living check to check? We're doomed. Well, we're not doomed. Number one, any gold or silver in any form is monetary at its base. And while you very well may be living paycheck to paycheck, maybe you can step back and see, are you going into Starbucks for that cup of coffee? Could you rather put that towards some silver or some gold, right? Because it doesn't matter what form it's in, if it's broken or bent, etc. And, you can go, how they have the antique malls all over the place? Give them a call and say, what dealer does a lot in sterling silver, right? Have a conversation with that dealer. My bet is they're going to have a lot of scrap silver that they will sell you for, even if you did it a couple pennies above melt, right? Because then the dealer will get more money than they would if they just took it to a smelter, which is typically what they're going to do, and you're buying it cheaper. To them, it's a win-win. There is always ways to accumulate. All this stuff, where do you think I got this stuff? I'd go to yard sales. I'd go to estate sales. If it's marked sterling or 925, it's 92.5% pure. Even a dime, right? Now, it's 90% silver, so it's like 0.713 however that is. But, you can get that for very cheap. So there's always a way to do it. But I would also suggest that you really beef up on your skill sets. Because if you're coming, for example, in my bug out and the people that I have on that list, they know plumbing, they know carpentry, they know farming, they know electrical, they have a lot of skills and talents. So what? If they don't have the gold and silver, I have that, right? So you come together in community, you bring what you have. Because I'm not going, if I had to, I would, and I certainly have in the past. But I'm not going out there to lay irrigation. But I certainly know how to do it. So what's it worth to me? If you know how to lay irrigation, rock and roll hoochie coo. I'm going to make sure that you have food. Somebody that comes and works on the property, on the farm, they go home with food. And you've created a new relationship. So it isn't just about gold and silver. It is also about creating surety in all those other areas. It's very important. So there's always a way that you can do it. And look, you're here. So no, we're not doomed because we can come together and need to come together in unity. Everything really has been about breaking us apart. And that's actually been true since the 70s. That was part of the plan, is disintegrating that family nucleus. Well, what happened in 2020? Divide and conquer. And look at what's happening today. In many cases, if you don't agree with what I think, then I hate your guts. We're divided. We have no conversation. I would like to end that. I would like everybody to be able to have the discourse, the conversation, because that's the way we learn and that's the way we protect everybody's rights. Not just over here. Here, the plan is divide and conquer. My plan is bringing us together in community. What a concept. What a concept. So no, we are not doomed if we come together in community. If we don't, then what can I say? Forbidden Planet 7777 asks, I remember the good old days when I bought a double eagle for $275. LOL. Yep, it was 200. The spot market was 248 when I first came into these markets back in 2002. Yep. You know, I mean, those gold Swiss francs, I was buying them for like $70. I was buying silver dollars for like $4.38. Yep. It's not where any of that is anymore, is it? And it's still severely undervalued. So wrap that around, right? You still need to be accumulating it, because if I'm right, and I frequently am, and I know how to determine fundamental value, which I will be presenting to you in all the different areas soon. We'll probably have that for you for the new year. I think that would be a nice new year gift, actually. But it's still time to accumulate this, because the fundamental value is somewhere around 40 grand. So at 4,200, 4,500, bargain, 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 bargain. And even at $60, bargain, bargain, bargain. And Biblical Discernment News says, Catherine Austin Fitts has stated it's more of global trade collapse as more issues ahead of currency collapse. Thoughts? Well, they kind of go hand in hand, don't they? Global trade, having the ability to buy from one country or another country. And, you know, really since 2020 and the breakdown when we saw how fragile those supply chains were. I mean, I was a stockbroker in the 80s when all the talk was about globalization. And I remember thinking, I can see some problems with that. So what did the U.S. do? They shipped off all their manufacturing. That means that all those factories were dismantled. It takes a minute to bring factories back. So I agree with Catherine Austin Fitts. Global, it's more of a global trade collapse. There's more issues ahead of currency collapse. I think they're hand in hand, and they're kind of like the same thing, because when other governments don't trust your currency, you got a problem. But then again, you got the IMF with that big umbrella currency with all the currency. Well, it's not there yet, but they can put all of the currencies in there. Then you have one currency, and then it just translates into a local currency. So again, it goes back to being as independent and self-sufficient as possible. And Cryptonomics asks, curious as to her take on what her take is on goldbacks. Is that what my take is on goldbacks? Okay. I think they're beautiful, and Zang Enterprises is bringing out Arizona goldbacks. I could see where they fit for a small percentage of that cash part of the barterable portfolio. Remember, and this is a $1 gold back, but remember, it's got 1,000th of an ounce of gold in it. So and gold is coming back. I mean, all of the talk and the noticing of the gold and what's happening, actually both gold and silver, I would say that that's true. So we'll probably get more adoption of this. Would I put all my money in it? No, and I don't really mind premiums. You know that. I know it's important to know how much the true value of something is, so you know if it's undervalued, fairly valued, or overvalued. So I don't mind the premium because of its potential functionality, but would I put everything in this? Absolutely not. Absolutely not. Would I put a little bit in there? Sure I would. Of course I would, because it's the only way that I can do 1,000th of an ounce of gold. So that's how I feel about goldbacks. And Optimist Beekeeper, oh, we have bees too. I love my bees. Hi, Lynette. Are you planning to do some more videos on the other mantra areas? Would like to learn more about this. Thank you. I think I will pass this question over to Joshua.
the simple answer is yes. And in fact, I queued up a video. If we want to pull it up, it's the one we did with Morgan.
Yeah, why don't you do that?
Sure.
I think they'll love seeing it. You're seeing it here first. People don't necessarily understand or see where the rest of the mantra fits with the financials. And this is where creating local community really comes in. Maybe you don't have the ability or the desire or the knowledge to grow food. Go to a farmer's market, meet the people that grow your food, give them a day or so of your labor. You'll learn a skill, you make a relationship, and that could just save your life.
There's a joke online that says, I can spend $56 on a tomato plant and garden, or I can just go and buy a tomato for $1.50 at the store. And that's true. What is being discounted in that $56 for your first year tomatoes is your learning curve. If you get a tomato, it's an investment in yourself and in your future. You're learning how to identify key problems with that plant, and the next year it's going to be easier and then easier and easier. We've lost and gotten out of touch with that aspect that in order to be free and have that freedom and security in our own lives, we need to be growing our own food, or at least learning those processes so that when the time comes, we're not trying to catch that on the fly. You're not going to want to learn how to grow tomatoes in a famine.
Okay, you want to make a comment on it?
Yeah. So one of the things that we are trying to do with these videos is teach people that, like, again, as the saying goes, the best time to plant a tree was 20 years ago, and the next best time is today.
Yeah.
And so these videos show, Lynette has planted her trees 20 years ago or so.
Well, most of them, some of them in 2010, most of them in 2013, and then up north, we did that, I think, in 3 years ago. So, yeah.
So it's been a minute.
It's been a minute.
What we're trying to show is that where you could be if you just start today. And what we are going to do also is temper the expectations that if you live in an apartment, there are still things that you could do. And if you don't have the funds to build a garden, or, you don't have the space, then we teach you how to become a part of a community. So there's always something, right? There's a part of the mantra that you can get your foot in the door anyway. So that's our goal, is to, again, teach everybody how to become more self-sufficient and be a part of the Zang community.
Absolutely. And that even goes back to the other question. I'm living paycheck to paycheck, and I can't afford to buy gold and silver. Well, there's more than gold and silver. You can't eat gold and silver. Maybe you can convert it into something you can eat, but generally speaking, you can't eat gold and silver, but you've got to eat. So it's like, that's why those skill sets become so important. And it is a huge frustration of mine, because nobody ever seems to really see the value in it. But it's exactly because of my studies on what happens as we go through these transitions that I personally became an urban farmer. Because I'd be an absolute hypocrite if I know about this and I talk about it, but I don't do it. So I believe in leading by example, and also wanting to make sure that I can always feed my children and my family. And it started out, I was just trying to feed 20 between my daughters and my siblings. And now, if I could feed the world, I would feed the world. Honestly, I would. So yeah, there you go. Awesome. Thank you. And yes, there'll be more on the rest of the mantra pieces as well. But we are making some progress, which I'm very happy about, because I've been pushing up for a while, and we're getting there. And Fico Frank says, Goldbacks are cool, but never going anywhere but being a collectible until never really be used in anything else. Some people will try to push it, though. It's got millions backing it. Well, then you must have a crystal ball and know. But what I know is that there's 1/1000th of an ounce of gold in here. And the worst thing that happens is that they melt the paper and they take the gold, because gold in any form is indestructible. So, I will definitely say that not enough places accept this yet, but it's still at the beginning of a gold rush. And I'm telling you right now, there is no fever like gold fever. So you could be absolutely right, which I'm not saying do all of your portfolio in it, but I could see it for a little bit of the cash part of the portfolio. And if I'm wrong, you still have gold. And if nobody will accept the paper part of it, you can remove the gold. And Broke Stacker says, do you foresee a significant drop in silver bid ask between now and $60? No, I think we've already done that, because I definitely saw spot silver, the contract, at $60 yesterday. So are the short sellers taking positions? No. It does not look like the short sellers are indeed taking positions. It looks like, because of the scarcity of it, it's not a contract. The physical metal, there's a finite amount of it. Just the opposite is happening, which is why it's having just a massive run. Can you pull up stockcharts.com on here? Okay, so let's look at these charts for a minute. And you can see where the markets aren't done yet today, but you can see where they ended yesterday. And if you put in $SILVER, there we go. Okay, so you see that little itty bitty correction cup that it created, and then the breakout. So remember, it works like this. When a price is suppressed, and it could be shorter or longer term, right? But when a price is suppressed and they hold it down, and they hold it down by selling shorts, etc. When they release it, I'm not doing this very well today. When they release it, it shoots in a direction. Can you see how the spot silver chart has shot up on that right-hand side? My right-hand side anyway. Yep, right there. Now, can you point out that the red line underneath? That red line is that 200-day moving average that we were talking about. And so can you see how it shot up a lot there, and then it just went into a little consolidation pattern, giving that 200-day moving average a chance to catch up to it. It is still technically overbought, because 10% away, either above or below, doesn't matter, but 10% away from that red line, that 200-day moving average, is considered a lot. It can stay up there, just giving it a chance to catch up, or it can consolidate down. And you can see, even in that consolidation, previously, like in April, spot silver did go below that 200-day moving average line, but now it's staying well above even that 50-day moving average. So technically, let's see, do I foresee a significant drop in silver between now and 60? Did it hit the 60 already? It did yesterday. I don't know that that's where it closed, but intraday it did it. What's that, 57? Okay, so it closed at the 57 mark. It could, and just be a technical correction, it doesn't matter, or it could stay in this consolidation pattern and just give that 200-day moving average a chance to catch up. So we will see. But even if it does in the physical market, I don't know what the change in the premium has been, because that's not an area that I work in. But if the demand for the physical is huge, like that's pushing the prices, the premium could also go up, even if the price corrects down a little bit. But there's the chart. Technically, yeah, it's overbought. It just means it went too far too fast, not overvalued, just a bit overbought. And it makes it really clear. You see how it made that little cup, right? Yeah, there. And once it broke above that price level, now it's going to the next level. But no, I don't see a major correction between now. It could just stay in a range. But even if it pulled back a little bit, would not be a big deal. Can you see what the number is on that 200-day moving average, the red line?
38.97.
Okay, so the 200-day moving average right now sits at $38.97. And remember, anything above 10%, 10% away is considered a lot. So it's very overbought, but it can stay that way. It doesn't have to correct back down. And okay, Broke Stacker asks, what are you seeing in terms of the number of put options and short positions on silver right now? Is a dip on the horizon? I'll take a deeper look in the shorts and put options, but I don't see it. I see more of an accumulation because of the shortages that they're experiencing in England especially. But I'll look. Those are all contracts, though. That's why it's so important, really, to understand the true fundamental value of an asset, or you're letting Wall Street dictate everything to you. And I've lived in that world enough to know that I don't trust them. Do you? And ZooTube 2024 asks, what about buying silver now and when the ratio comes down, trading for gold? That's called a ratio trade, and that is a possibility. The challenge that we could have is in what is available. It's availability. So you can certainly do that. But again, I'm not short term, and I'm very aware of the functions that I'm trying to accomplish. So personally, I would rather just get in place, and then I don't have to think about it. And I don't have to think about ratio trading or any of that. I just get into position, and then I don't worry about it. And that's kind of makes me more comfortable. However, you could certainly do that if that's what you want to do. I'm not sure what availability you would have to fulfill the functions that you want. And maybe there's a combination. I mean, honest to goodness, it never has to be all or none. You can do a combination of things, and that would be okay too. Because at the end of the day, you really do need to do what you're comfortable with, regardless of what anybody says, including me. And you don't have to worry about insulting me. I'm here to support your efforts. That's my job. And hopefully translate financial noise along the way. And Sunday Money 801 asks, how will the monetary reset affect people with current debt, such as a house payment, a car payment, a $500,000 house? Will they be paying that loan back with devalued cash? If you are executing the Zang Enterprise Sound Money strategy, then yes, you will be positioning into the appropriate amount of gold now, allowing that first overnight revaluation to occur, and then you will be liquidating a certain portion of it. Maybe right now that takes 10 ounces. Maybe when that revaluation happens, it'll take a quarter of an ounce. Converting that into dollars to repay that fixed rate debt. Yep, with dollars that have zero value. That is how advanced economies, well, and even not advanced economies, repay that unpayable debt. They do it with currencies that have no value. Hence, $10 trillion Zimbabwe. Look at all those zeros. Woohoo! I'm a trillionaire. But it doesn't do me any good because this has no value. And Forbidden Planet 7777, I see so many videos on YouTube of people complaining about what coin shops will give them for their coins. When things get really going, it's not coin shops you will be selling to. That's a very good point. And we are not a coin shop. We work with several wholesalers. So you're always in at the market and you're also always out at the market. A mom and pop shop, and there's nothing wrong with mom and pop shops, they just don't have access to all of the tools that a larger company like Zang Enterprises has. And they sell, if you walk in and they buy a coin from you, they're going to turn around and they're going to sell it to the next person that walks in, whereas we have a lot more options open to us, and we also have deeper pockets. So, and we have a strategy. And, I think that's important. Not everybody feels that they need a strategy, and you've got to do what you're comfortable with. But for me, if I can see these patterns, and it's really about the aging of a currency. We know how to do that in human terms. You can tell the difference between an infant and an old person. It's because we've grown up and we've gotten used to what that looks like. But the same thing is true for everything, including currencies. And that's why I try and show you the patterns so that you can see where we are. But there's absolutely zero doubt that we are at the very end of this system. And we're already transitioning into a new system. And when one goes away, another one pops up. You need to hold your purchasing power intact. It'll enable you to take advantage of opportunities along the way and be in a much better position on the other side of this. And Jeff Gates 8080 says, this might sound stupid, but I took a loan on the house for $60,000 and put it in gold and silver in 2018. Best loan ever. I'm glad that worked out for you. I really am. I knew somebody that did the same thing. But the problem was that he needed money along the way. So if you can do it and hold on to it, great. If you can't, then it could be a problem and you might have to liquidate at the wrong time. And you want to do it when it's the right time, not necessarily the wrong time. So I am very glad that worked out for you. And Miramore says, not too late. Got old jewelry, got silverware marked sterling, buy rolls of quarters, $50 at bank, and look for solid silver rims. Re-roll, redeposit the rest, go to garage sales. It's not as easy. It used to be so easy to find this stuff. More people are more aware, but absolutely. I still go to estate sales and garage sales, and you never know what you're going to find. And I'll go to secondhand shops as well. You just never know what it is you're going to find, but you're looking. Keep a magnet in your pocket with you, a nice strong magnet, because gold and silver are non-magnetic. So if it's marked sterling or it's marked 925, to your point, Miramore, that is 92.5% pure. And yeah, you can still find it. It's just not as easy as it used to be. And yeah, I have had a lot of clients in the past that go to the bank, get dimes, quarters, and $50, and they sit there at night, they go through them, and then they re-roll them. It's not as easy as it once was, but so what? What else are you doing when you're watching TV? So thank you for that reminder, because you're right. And Tangle 1300 says, Square 7944, and the number of businesses accepting goldbacks just keeps going up. People can Google goldbacks and find info on their state's town if interested. Thank you very much for that. And you need to do that. You can't just make assumptions about anything, but the more businesses, and I don't know if we're quite ready yet, but we'll be accepting goldbacks for purchases. So there you go. It's another business to accept them. Great. Thank you for bringing that up, Tangle. I appreciate it. And Gascon Hart says, Gold's repricing and growing in dollars value did not even qualify as capital. So capital gains for gold increasing in value is theft. Yes, inflation, you paying capital gains taxes on inflation is theft. It doesn't matter what you call it. Thank you for bringing that out because you're absolutely right. And the more people that start to understand that, the less they can get away with. But we have to come together and say no together. If one person says no, it's not effective. If 3% of the population says no, now it's effective. Great point. Thank you. And Gina Young, 6900. Hi, Lynette and Zang Gang. I always watch Tuesdays live. Thank you so much, Gina. My question is, can President Trump just get rid of the Fed? Is it in his power to do that? No, Congress would have to do that. He can't just get rid of the Fed. But what he can do, especially since he's made his selection for the next Fed chair, is he can put in place somebody that is more likely to do what he wants them to do. What does he want them to do? Lower the borrowing costs. Therefore, more money can be created and spent, and that means more inflation. That's what it means. When you see them, whoever it is, saying we need lower interest rates, it's because they want inflation. But what happens when that inflation heats up noticeably again? You've got the public that's going to go out of their minds because they're already suffering. Yep. So no, he can't just do away with it like that, because if he would have done that already. However, he can definitely, and he has already seated the members of the FOMC with people that are more amenable to lowering rates and generating that inflation. So that's what he can do in controlling it. Congress can get rid of it. And lifelong learner lady asks, what do you think about collectible silver, like Engelhart poured silver bars? That's not really collectible. I like how they are collectible, maybe similar as pre-33 gold because they have numismatic value and collectible value. I mean, I could always be wrong, but I'm pretty sure that the Engelhart poured silver bars are not classified as a collectible. But again, I'll go back to, can you hold them? See if you can hold them in an IRA. That's really what the tell is. And if you can, then they're in a different category. If you can, then they're classified as monetary gold. If you can't, then they're collectible. So did you pull it up?
It does say that they are approved for precious metals IRA, approved by the IRS.
Okay. So you can hold them in an IRA, not collectible. I don't care what they call it, semi-numismatic, it's all garbage. No, there would not be any protection if you can hold it in an IRA. ZooTube 2024 asks, Glint is not redeemable. It is held in a Swiss vault, but not for delivery. Hubby's Glint has gone way up and got away from fiat and still able to buy. Agree, just small amount to spend. When I did my research, I was pretty sure that Glint was redeemable, but I'm going to do something on a comparison between Kinesis and Glint for next week, and that would be part of what we would be looking at, is that redeemability. So you could be right, and I could be wrong, and I'm always open to saying, I could be wrong, but we'll find out, and I'll show you next week. I'll pull it up. And David Cortez, 1199. I just rolled over my 401k to a gold IRA. The broker charged me for 2024 1/10 ounce gold Liberty Eagle coin. Quantity 709, price 704.51, total 499,497.59. Did I get taken advantage of? I don't know Can you copy all of that, and I'll find out. However, I'm going to tell you, if you did all 10th ouncers, that's not horrendous. Because you can take a distribution as well. And if they were to do an overt confiscation like they did in 33, you were allowed to hold 5 ounces of gold. So if it's in a very teeny tiny form, the 10th ouncers, it's probably a bit safer bullion because you would be using such a small little piece. It probably would not raise any red flags, but I'll find out and get back to you, David Cortez. And ZooTube 2024 also asks, Lynette, do you think they will reinstate the old silver coins as coins after the crash? Is that why the refineries are no longer accepting it this past month? Well, I did not hear that the refineries are not accepting junk silver. But I'll look at that. But no, okay. No, typically once a currency is deemed not a currency anymore, they don't reinstate that. They'll go to something new that will give them more control. So, no, I don't think they will reinstate it. But they are coins. They'll probably come up with something new. And I'm going to check out the refineries no longer accepting it this past month. I hadn't heard about that.
Posted in October, but they're backlogged. That's what they're claiming.
That they're backlogged, they have too much of it?
Yeah, there's too much. Significant backlog of work, as what has been stated.
All right, I'll look at that a little bit more. Okay, and lifelong learner lady, you are amazing, Lynette. Well, thank you so much, because I'm also a lifelong learner. I think it keeps us young, really. Thank you for all this information and inspiration, not only in storing value in metals, but also on the last stand front. I'm planning a big garden for spring. Yay! And we have Morgan. If you need any help, you give us a call. We'll connect you with Morgan. If we can be of service in any way, we're happy to. We have a phenomenal community around us, and we are all really wanting to make a positive difference. And Wolf 728, Lynette recently saw a video about the Wizard of Oz and how Frank Baum, author, was actually describing in the book version that it was actually a message about America's broken monetary system. Yep, follow the yellow brick road. And I'm going to say, stay tuned, because we've got some things in the fire that we're planning and executing, and I think you're really, really, really going to like them. But yes, the Wizard of Oz is really supposed to be about the monetary system, and it really is applicable. It really is. Don't look behind at that man in that counter that's behind the curtain that's pulling all of those levers. Yeah, it's time to look at that and saying no and follow the yellow brick road. Optimistic Beekeeper, hi Lynette, are you planning to do some more videos on the other mantra areas? Would like to learn more about this. Thank you. Yes, we are. We have already begun. I'm not really sure exactly what that pace is going to be. Like that one that we gave them a preview of today. Do you know when that's going out?
It launches today.
Oh, it launches today? Yay! Oh, I'm so happy. You guys have no idea. Oh, that makes me feel really good. Thank you, Josh. Thank you. So, yep. And lifelong learner lady, thank you, Lynette, for finding a way for everyone to get a hold of precious metals. Love when you point out that silver and gold in any form, including a fork, is a way to invest. It is, as well as in your skill sets. That is, everybody should be learning new skills right now. We're going to need them. And the more things we know how to do, the better position we're going to be in. And it is my pleasure. And Douglas Tavis, 6436. Hi, Lynette. I'm really concerned about a mandatory buyback from the government on our gold and silver because both are critical, strategic, and on the government's wish list. Your thoughts? Desperate governments do desperate things. And so, it all goes back. I know a lot of people go, oh, the premium on the pre-33. Guess what? I saw my Uncle Al having at least 3,000 ounces of gold in a legal way that he could use in the normal marketplace. What would that say about me if I absolutely ignored that? And I gotta say, I think there was a reason why I was put on this planet in this family and had that experience and all the other experiences. So when you hear me say I was groomed for this moment in time, that confiscation piece is huge because I was born in 1954 when it was illegal to hold more than 5 ounces of gold any other way than the pre-33. It matters to me. Yeah, I think desperate governments do desperate things, and they aren't going to go into the purchasing power chart and put your birthday in there and look at how much they've robbed you of your purchasing power since the day you were born. You think they're really going to stop in the last second and go, we got enough of your wealth. You can hold it. No, they want you destitute on the street. They want you dependent. There it is. We can't put my birthday. Well, yeah, we can put in there October 15th, 1954. There you go. January. That's fine. Look at it. That's how much. There were 36 cents worth of purchasing power in the dollar when I was born, and now you got 3 cents. Pick a date, any date. I just don't think they're going to stop at the very end and go, yeah, you can keep the rest of it. No, they want everything. They want full control. That's why we have to get redeemable gold back in the system again. Because otherwise, this will look like chump change compared to being in a full surveillance economy. That is not going to be, it's not going to be great. It's going to be horrendous. Alex Riley, 6269. Lynette, I apologize if you've answered this, but I was late to the stream. That's fine. That's fine. Is it better to currently be buying gold or silver? What is a good realistic amount of silver and gold to shoot for? Well, first of all, gold and silver are the only assets that are severely undervalued and in a long-term positive trend because the real trend is in the purchasing power like we just showed you, and that's going away. So the strategy, the sound money strategy is based upon what your current cost of living, part of it, what your current cost of living is, and you want to make sure to be able to sustain that. Some of that you will definitely do with silver. I mean, this is what you're taking for the gas pumps or the pint of strawberry. Some of it you're going to do with barterable gold, which if you have any ongoing medical issues, property taxes, I mean, we have it all broken out into which one of these and in which form supports every different goal that you might have. So for me personally, silver is my barterable position. Gold, I have if I had to compare, what do I have more of? This, my friends, is what I have the most of personally. But I have the barterable gold and the barterable silver. I have my emergency. This is my savings account right here. This is my savings account where I just have like 1 ounce raw pieces that if I had to meet a payroll or something like that, this is what I'm taking first. So it all depends on what your circumstances are. If you're not running a business and needing to make payroll, you still need an emergency savings, but you don't need the level that I would need because of all the payrolls that I have to make sure that no matter what happens, I can meet, because that's my obligation to everybody that works at Zang Enterprises. So it really all depends, and there's no one blanket answer other than call us, have that conversation, and we can help you determine what kind of gold you need and how much, what kind of silver you need and how much. And then it's tailored specifically to you. And you don't ever have to apologize, because quite honestly, on average, it takes 7 times of somebody hearing the same thing before it even begins to make sense. And then you can take it into even deeper levels than that. So no worries. I'm glad you asked it. And thank you for showing up. I appreciate that. And John Kurtz, 2691. Why is silver not priced closer to platinum or palladium already? It's just as strategic. Silver straddles 2 worlds. It straddles the manufacturing world, and so it is going to be closely aligned with what's happening economically. And then it also straddles the monetary world. And so it's the secondary monetary metal. But yeah, why isn't it? It's actually a diminishing asset because it gets used up in manufacturing. That's why it can't be the primary currency metal, and gold can because it's indestructible. But it means that the more it's used in manufacturing, the less that there is available of it. So it'll go up, and it'll go up in terms of whatever currency substantially, but by the time you convert it, you're converting it for a function, for a purpose. So, I don't think about metals like a trade at all. I think about it strategically. What am I trying to do? Me personally, I'm trying to leave a legacy for my children, and not just my daughters, but for the children that aren't born yet. That's what I'm trying to do. What are you trying to do? I mean, that's the question to ask. What am I trying to accomplish? I've got to sustain my standard of living. I've got to protect whatever fiat money assets I've accumulated, though honestly, I don't really have very many of them, mostly just cash, because I've been a stockbroker and a banker, and, I'm too tired to play the game. Honestly, my job isn't paying attention to their garbage. My job is, it is. Yeah, my job is to pay attention to their garbage and then translate it into what that means. But I'm a long-term strategist. That's where my level of comfort is. You have to do your level of comfort, but I agree with you that silver is severely, severely, severely undervalued. And so is gold. And probably so is platinum or palladium, but those are more economic numbers, not monetary. And this is a currency life cycle shift, so I focus on the monetary metals. And Chris P. Bacon Jr. When my grandma passed, my mom had a box of her costume jewelry she was going to donate. I looked through it, and 90% of the stuff was not costume. Also, the knockoff items were mostly sterling. How awesome that is, and how great that you took the time to look instead of just making the assumption. That's awesome. Congratulations. Good job. And Dennis Rieshling asks, don't you think there was probably a higher percentage of people in 1933 with gold because it was used as money then? Yes. But remember how they did it. I mean, these guys know how to make this transition and keep people really stupid. Where's that other one? Where is it? Here it is. This is how they did it. Yes, this was, the money of the realm, a 1 ounce $20 gold piece. But oh my gosh, you put it in your pocket. It's so heavy, it could pull your pants down. This is so much more convenient, this gold certificate. See, it's got that gold right there. And hey, you can walk into any bank with this and walk out with this. So they're just the same thing. This is $20. This is $20. Rock and roll hoochie coo. And I will be showing you this next week. But at the same time, they introduced this. Can you see how closely these two things resemble each other? And so for almost 20 years, these three things all were in the economy at the same stated value, $20. And because people got used to thinking, well, this is just the same as these two things, when they took these two things away and they were left with this, people thought, well, nothing had changed. When in reality, everything had changed. The public just lost its power. They should have stood up and said, no, we're not giving you this. And if they had, there wouldn't have been anything, if there was enough quantity of people, there wouldn't have been anything the government could have done. But they keep us stupid. They don't want us to understand that we are working for corporate debt. I'm going to show you this next week and how that kicked off and how that happened. But look at the bills in your wallet. If it says, they do, Federal Reserve note. Well, the Federal Reserve is a private corporation. It's a corporation. It's not federal. They don't hold reserves. It is a private corporation. What are you working for? Federal Reserve notes. You're working for corporate debt. Why is that okay with you? Not okay with me. But that's how they do it. That's how they're making the change. That's why they're forcing adoption of this digital currency. They're forcing adoption. We're not going to have any choice unless we come together in global community and demand it. Enough people buy gold and silver, we got a choice. We have to do it. We don't have any choice about that, in my opinion. And T-Ment says, I'm from Singapore. Can I do the schedule call Zoom with your crew? Yes, we'll modify because obviously there's a time difference. But the answer is yes. Give us a call. I'd probably be better to email in at what? Hello, do you think? Okay, hello at, is it LynetteZang.com? And then they will connect you with somebody, but the answer is yes, you can. We're happy to do that. So I think that's it for today. This was a great session. I've got my marching orders for next week. And, this time of year, everybody's busy. They're going, enjoying the holidays. I really am enjoying listening to all of the kids out in the front yard just going crazy with all the decorations. So be safe out there. Come together in community. Love your neighbor. We all don't have to think exactly the same way. This is not a cult. It's a community. Let's come together and let's make a positive difference for a lot of people. And until next we meet, please be safe out there. Bye-bye.